Alrighty, guys, what is up? We are going to be doing a full post-week recap of the P&L, that I generated this week through trading, specifically all of the setups that I took with the whole in-depth analysis. As you guys know, we started doing this like 3 weeks ago, but I just want to share with you guys, the YouTube community, not just my mentorship community, because we do a separate set of videos for them. But every week we're just going to cover the P&L, cover the trades, cover the analysis, because I do think you guys can find that very insightful and use that to your advantage to take trades, maybe understand analysis and whatnot. And yeah, so let's get into it, right? Essentially, coming into Sunday, we're always going to start, remember, we're always going to start on Sunday or Monday. That's going to be like kind of like our anchor point, right? Now, when someone says Sunday or Monday, it's always going to be Monday, right? I just use that interchangeably, but we all know that the market opens up at 6 o'clock Sunday, which is considered Monday, right? Covered this in the last recap, but we had a gap up, right? And
The
the
market is
reason was
closed.
we had this gap up was because, if you guys have been paying attention on the news, there was the Venezuelan incident of where essentially Trump, the U.S. invaded Venezuela and then abducted the president and extradited him back to the United States. And obviously that volatility, caused a little small gap up because there's tension, there's uncertainty on gold, right? Now, obviously, I don't trade oil, but oil markets. This was, oil was mainly the one that was affected. Kind of had, a bigger gap up, major move, but it rebounds very, very quick. But essentially, coming into today, right? We had that gap up, and usually, what happens is that when the markets open up, right, a gap up like this, in my experience and just my understanding, especially on gold, usually you will see that new week gap, or that gap that opens up. Usually it'll get rebalanced into. Right, so I was expecting price to come up here, and then on this move that was coming down, I was expecting price to retest this level right here, and then go higher. Okay, and real quick, if you want to go ahead and join my Discord, you guys can see all of the P&L right here in the Discord, so it's all there for you guys to take a look at. But yeah, so that's what I was kind of expecting. And usually what as well it happens is that you have a couple taps, right? So it'll hit the gap, and then it'll move up, it'll hit it again one more time, maybe then go up like that, just to reaccumulate. I've seen it happen multiple times. In this case, so it didn't do that, right? So we opened up, we retraced, and we just ended up rallying for the day. Now, if we kind of zoom out a little bit, and just zoom out a little bit more, right? 1 hour, 4 hour, right? The reason why we're going up still is, remember, gold is still fundamentally, and I'm going to disable this for a sec, gold is still fundamentally bullish. Now, I say this all the time, guys. You have to have a very strong analysis on the higher time frame. If anything matters, guys, you need to look at the higher time frame. Okay. I see too many people focusing in on medium time frames and lower time frames, but understand that higher time frame structure is always, always, always going to be way more relevant and hold 100x more than lower time frame structure, and this is a known fact. Okay. So when you are marking down, doing a top-down analysis, all that means is we're going from a higher time frame to a lower time frame, doing our analysis, our technical analysis, our fundamental analysis. Okay, you have to always mark out things like your higher time frame trend lines, as well as your higher time frame supply and demand. So if we were just zooming out like this, right, clearly you can see we have a area of supply over here, right, area of demand over here. But the main thing is that as we're trending up, we want to take a look at the trend line. So you can see this is a very obvious higher time frame trend line. Okay, now remember, we're looking at the current futures contract GCG 2026, but this was the main thing. We have essentially a trend line here, and if we were to aggregate it, we were to average it and make it into a channel, right? We just copy the same slope, the angle, and this is what I do a lot of the times. We would see we have this area, right? Essentially this whole area, this whole trend line. Now, obviously, it's not a coincidence that when price comes into this area, we have a reaction, because what will happen is that institutions, remember, they don't trade the same way as retail traders. Okay, institutions cannot just click the buy and sell button. If they want to load big orders for their macro positions, their fundamentally driven positions, they're going to have to load them at higher time frame levels, and higher time frame trend lines are a level that they do use. And not even on gold, if you look at NQ, ES, this happens literally on every single pair. Okay, guys, so have that marked out, and then obviously, you can see we have a lot of reactions, moving from here, but the biggest thing was when we have that third tap, and we essentially close above all this structure over here, right? We close above these highs, okay? That's our full sign to be bullish. So this wasn't the best close, but I was confident using my experience and my models and whatnot that we're gonna retrace and then go higher. Now in this case, what happened was we didn't get the level that I wanted to retrace to specifically, right, and then go higher. But if we were to now to look at the lower time frame, well, if we were to zoom in, like the most obvious level of demand was technically like right here, because you can see like, well, look at all these reactions, right? We have a tap here, tap here, tap here, tap here. Well, it's not a coincidence that we tap here and then end up going higher. But the biggest thing was that I'm pretty sure this was a quarters level, and I don't know why it's not showing here. Maybe we got to go one more time frame higher. Let's see. Oh, right, because we've already gone and expanded into a new range. So if you guys don't know how this indicator works, this is my proprietary indicator for my mentorship students. It'll delete all the quarter levels as we go higher. But no, essentially the reason why this was such a highly probable trade, but I was just waiting for a little bit more of a retrace, was because we tap into that level of demand right over here. And then we have also a quarters level. So this is going to be at our 4,400. So this is going to be a key algorithmic area of where people want to put in orders, take TP, etc. And we're not going to cover order flow, my order flow software, in these lives, because it's a little bit too saucy, and like I just can't. It's just better to show the price action like this. But yeah, very simple stuff. Essentially, you could have just put a limit order at this area. Maybe if you wanted some more confirmation, recycling through the medium time frame. You could have. Yeah, there was really actually no good even medium confirmation as well. If I'm being honest, yeah, really no good medium confirmation. You just have to play this on a limit order. But I didn't take this trade. But if you want to take a discretionary trade off this level, you could have definitely done something like this. Stop loss, at the below the low, a little bit below the level of demand, and then you could have read it up to, I guess, if you held it to market close, it was like a 5 RR trade, right? So that's what happened. Now, essentially, I was expecting a little bit more of a deeper retrace, because if we take our fib tool out now, assuming that this is a swing high like this, we want to take our fib tool from our swing low to our swing high, right? Now, in fundamentally trending conditions and environments, you're usually going to have things like 33% retraces. That's a very common thing. But specifically in this case, I was thinking we're going to probably retrace to some level, some area of demand around here. And really the only level that I liked was really over here, right? This area. So I wanted to see us retrace to around here. Then I would look for some confirmation, then to go higher. But it unfortunately didn't happen. Now, as we're breaking structure to the upside, I didn't really see anything too clean. Once we closed above here, you could have said, sure, maybe, you could have bought on the retest of this level right here. Again, I didn't take this trade, right? You could have taken a limit order right off here, or say if you did a candle confirmation, stop loss below the low. This didn't end up going for like a 1 to 2. So a good rule of thumb as well, guys, is you don't want to go for anything too crazy. I would keep your trades in that 1 to 2, 1 to 3 RR range, 1 to 4 at max. I'm not saying you can't have high RR, but realistically, you're not going to be catching 30 RR, 20 RR like every single day. You know what I mean? So, just look out for that, because like how much can markets really move? Okay, but this was a trade I did take. So coming into this structure now, right? If we move up, coming to this structure, basically, even though we are bullish, right? We can still take scalps and trace in the other direction based off the other opposing structure. So if we zoom out again, and I take my fib tool from this swing high to this swing low, okay? Well, above 50%, that's going to be our premium, right? So looking for levels above our 50% is going to be, pretty important. And then as you can see over here, there's really no top wicks on this candle and this candle. So I was thinking that, okay, maybe if we come into this Q level right here, which you can see is 44.50, that, we can potentially have a sell-off, because, number one, if you again go to the the RSI, we're not really seeing a divergence up until here. Like the divergence only happens right here, so I'll mark that out for you guys real quick. But let's delete this real quick here. Yeah, this was just a retrace play off this bearish structure into this Q level, and then I just entered in off a candle confirmation, essentially with a divergence confirmation. And if I zoom in here, you can see that when we make this higher high, and it's more prominent on the lower time frame, but when we make this higher high right here on the RSI, we have a lower high right here at the same point. So you can see right here, This makes a lower high, this makes a higher high, and then once you have that candle confirmation right here or here, you then short. So very simple stuff. I will go to the lower time frame to show you what it looks like, but you're gonna see basically the same thing, right? Higher high, and then you see right here as we're making higher highs, right? And this is why divergence is so critical. As we're making these higher highs right here, right? We're not really making like we are making a lower high here, but it's not like as like the amplitude is not like the biggest, the differential, right? So higher high here, we make this higher high again from this one to this one, but then look what happens if we make a higher high from here to here. What happens? We make another higher high. So it's not like if it's not like straight in your face, then we can't take the trade yet. So once though we make this higher high right here, and then you can see clearly that slope downward, and then that candle confirmation coming in. It's just a perfect, a perfect sell-off. With the tap with the Q level as well, right? So essentially, what I did was I just entered in market order sell off this level here, and then I think I made like a 1 RR on this, or no, maybe I got stopped out break even. See, that's the thing, bro. Like the one thing I don't like is like if I do these recaps, like I remember the trades that I took, but like P&L wise, like we're just gonna get the net P&L. I think I either got stopped out break even, or I took this for like a 1 to 3 or 1 to 4. If I did, great. If I didn't, I just got stopped out break even. But this was the trade. I was targeting, I think, this low, because I was so confident that, hey, this gap should get filled and drawn towards, right? Because we should see based off the data that this gets tapped into, and it didn't. So I guess that that happened. But yeah, this is the entry, really really fire entry. But then you can see right here we completely invalidated that, right? We react off some low right here, and then we completely invalidated that. One more thing is remember, at the start of the week you want to anchor your VWAP. So as you guys know, I don't really use TradingView's VWAP because it is not as accurate, but it's still good as a potential not anchoring point, but like contextual based point, right? So you can see right here, one more thing is that once we come into VWAP here, there's a really great tap. Now you can take these, like this is a very known thing, like people take scalps off VWAP. So you could have essentially just put in a long position at VWAP at this band right here, at the point of it right there, or on the candle closure after it touches, and you can just go for like a 1 to 1, 1 to 2. That's what people do. They usually go for 1 to 1s to scalp VWAP like this. Or what they'll do is they'll have like really big stops, and then they'll go with the higher time frame VWAP and still go for 1 to 1. So I've seen that happen. They'll either take a trade like this, or they'll do like a trade like this, right? But this could have been something you took. I didn't, because again I was already by a short. Yeah, we just get stopped out like that, right? Now what happens is once we came into this level, I think if we come over here, this was the overall area of supply, like right there specifically, I think. Yeah. So once we came to this level, I was looking for another short, right? So I took a short right here on this candle closure right there, and I went stop loss above the high, and again I was targeting this gap again, right? Now it's 9:30, so we are expecting some volatility to come in, but you can see we end up chopping. But another reason why we took this trade was we tapped this VWAP band, and we had that nice 1 minute candle confirmation. But this was a scalp if we decide to take it for 1 to 1. But the reason I didn't scalp it is because it's 9:30. It's a key time for the market to move, so we should see some type of volatility. But I guess this overall move was the main thing, and we just chopped for the whole day. Now there was some other order flow confirmations. I obviously can't, tell you guys that for saucy purposes, but there was that confirmation, right? And the reason why I didn't hold this trade, I was also in this on personal, is because we closed at a high. And what usually happens is if we close at a high like this, you are subject to gap up volatility when the Asian session opens up. So you don't want to really subject yourself to that and hold the trade, because we could have just gapped up like that. It didn't happen in this case, but that's why you want to close your positions at around like 3:30, 4:30, just so you don't deal with that issue, right? Now coming into today now, or not today, or Tuesday. This is Tuesday's day now. The trade that I took this on TikTok live, if you guys saw this, but essentially it was just a tap of this area of demand. So if I were to mark out this area of demand right here, you can see we can clearly see that demand right here on this swing structure. If you want to mark out the wicks like that, just the top of that, well, you could have done it like that, but I kind of like to get a little bit more room. So we hit that level, but the thing is I don't want to take the trade specifically off the level with a limit order, even though I could have. We could have just done something like this, stop loss like this, and then whatever. But I was waiting for a confirmation, right? I did not like the candle confirmations on this swing leg up, but you have to understand, like, contextual based market structure reading is super important. If we make swing structure when we open up like this, we come up, we don't go past the low, we just retrace again, and we come up one more time, and then we make a micro swing leg, and we're coming up again for the fourth time. There's a high probability we're going to break through this point, right? So essentially what I did was on this 1 minute candle closure right here, I took a long stop loss at this point right here, not like at the low, but just like right below the low, just to give it some breathing room. And then we went for a 1 to 3. So that was a very beautiful trade that we caught live on on TikTok. And the reason why as well is like there's no reason for us to be shorter, right? We're not really in a level of higher time frame supply, and sure, you can say that, like, these are some visual imbalances or whatever, but like the RSI is not really oversold. We are having some like overall like divergence, as you can see, like as we keep going higher and higher and higher and higher. But then usually you will see a sell off. Like if these divergences were valid, you're gonna see like a big aggressive dump like that, which just didn't happen. So we're still trending, we're still chugging higher, and then you can see like we rebalance out around here once this swing leg happens, and then we cancel out the divergence, and then as you keep trending higher, it doesn't really occur. So yeah, right. And then yeah, I didn't take any more trades after that. But that was the setup, and then you see there's a VWAP tap. Like it's crazy how VWAP works. Like these algorithms are just scalping VWAP like crazy. Like you can see, like if you were scalping VWAP, bro, let's going from VWAP to VWAP. Like let's see, you put a limit there or like a limit here. Like look at that shit. You could just have been getting like crazy ass trades going VWAP to VWAP. But yeah, coming into Asian session again, I didn't take any trades. I didn't really like anything. If I was being completely honest, I didn't see anything. I didn't like anything. Yeah, now coming into Wednesday, same thing. We closed at a high, but the reason why I was so confused on this was because this high like was a fake high, right? The reason I could tell is if you're looking at the order book, and you're looking at like the order flow, like you can see where real selling is, right? But in this case, right, people were just taking TP, and I know for a fact, like you can see, like this is London high from the 29th. So you can see we took out London high, we reclaimed that high just barely. And you're never going to see this, guys. Like you will very rarely see just a tap like this and a huge fucking sell off. So I'm still biased long right now. Okay? It's just in respect to this overall higher time frame structure now, right? Or VWAP or whatever, I'm just looking for like retrace place to key levels to then go higher. So really the only key levels, if we're looking at our supply demand, are going to be obviously like here and then like here, right? Very simply put. I'm going to delete this as well. Because if we break through this swing low, like right here, there's a very high probability that we're just going to just dump all the way down just straight to our opening gap, right? So like if we close below here, it's just going to dump straight down like that most likely. So that's why, this is really our extreme last point of taking buys, right? But again, there was essentially a scalp off this level of demand as well right here, because we take out this low and then we reverse up. You could have taken this trade. I took that trade. This trade that I took was a scalp off VWAP, so I got in right around like here, I think, and then stop loss was like this, and then it went for 1 to 5. I closed for 1 to 1 because I was hoping we can go take out the high like right around here, and that didn't happen. So that went for a 1 to 1 on that one. Trailed it for like 1 to 1 after we broke structure here. It is what it is. And then I took one more trade. No. The reason I didn't take this trade right here was because there was news. So even though we hit this level, there was like news around this area. So like I didn't want to take it because there was like news getting released. So we were kind of done for the day after that. But then we came in, we opened up here. You can see we tapped this Q level right here to the tick, and then we end up dumping to this VWAP band. But again, I didn't like this tap because it was just too ticky. Like it was just way too like to the tick, But it's crazy how algorithmic these markets are moving overall. Like if you were to take discretionary trades at these points, like you could have made a bag. You feel me? Like it's crazy. And then we come into this area of demand here, and then this was the trade that I took basically. I actually took this one as well. I took this one. I got stopped at 1 to 1. I'm pretty sure on this one. But then this was the main trade, and this was probably one of my best trades for the whole year. But after we hit this level, essentially, there's a lot of confluences, a lot of confluences. Number one, is that we're coming to this. If we look at this overall structure, right, we're coming into this big area of demand. If we were to take our fib tool out from this swing low to this swing high, it's a very deep retrace, which I like. Okay, now if we were to take our fib tool from this swing low now to this swing high, right, it's not fully like a 33% retrace, but it's a 50% retrace. Perfect for a higher time frame retrace, like a 50%. You can see right there, it's aligned with that with the line, right? I don't think the VAH was here at this point, but it was just a perfect 50% retrace on this leg and a 786 retrace on this leg. So both of those retraces are in a discounted area. So that's like they compound on each other, right? Number one. Number two is that we had a divergence. So as we made this low like this, I'm watching the RSI, and what ended up happening was we made this low, and then we made this higher low right here, right, like this. So there's just a clean setup, and our execution was essentially after we hit this level and we saw that confirmation on that candle come in, right? It was just a no-brainer to take a buy. You could have either taken the 1 minute confirmation, and that's going to be a double doji right here. So you'd have either gotten right here, a stop loss like this, going for a 1 to 2, or in this case, what I did was I went for a 1 to 11 all the way up here, but I ended up closing right around here just to close out the day. So it's like a 1 to 9, right, 1 to 10. And if you went for the 3 minute confirmation, it would have been around the same thing. You would have either gotten here or here. And for the 5 minute confirmation, it would have been either here or here, because it's just a very, very strong hammer candle. And we know that this confirmation is just too clean, right? But yeah, basically I got in on the 1 minutes. I got in right around here, right there. Stop loss was below the low, and then I ended up just letting this run for like a 9 RR trade, like crazy, like absolutely fucking crazy. Actually, like, yeah, right here, like 9.1. So that was the one trade. I held this, like I was like fucking diamond handsing it through the whole thing, and yeah, so it was really good stuff. So, continuing on, okay, after we end up tapping and hitting into VWAP like this, basically we had that crazy expansionary move up, but we ended in at an overbought level. So I'm expecting Asian session to just rebalance a little bit and then continue the trend higher. Now, basically this was a lower time frame trend line. So like if you just kind of like marked out these two lows like this is a lower time frame trend line like this. There was also a low volume node on the volume profile right around here, and I just aligned it up. And if we go down to the 1 minute as well, you can see that in the swing structure, these are just way too inefficient, these impulsive candles. So we come in, this is the low of that swing structure as well. We were just looking for rebalances into that low, as well as the fact this is a deep retrace around here. Yeah, that's how we bottom tick this trade on TikTok Live around here. And we end up covering the swing low, and we end up going for a 1 to 3. Now at this point, actually a little bit tighter. At this point, let's make it a little bit tighter. Yeah. At this point, I was holding again because my buy. This was just essentially just a scale-in play and a continuation from this level over here. So I was targeting again this high over here, like this, right? But we just chopped for like literally like 10 hours, guys. And we had NFP dropping today, so obviously I just couldn't take like I had to either close a position before news dropped, or I'd have to hold it and risk getting blown out on the slippage or something which I was not willing to do. But on TikTok Live, like basically we were in this for like a 1 to 3. And then what happened was that it was just we were in this trade for like the longest time, and then I moved to 1 to 1, but I didn't like this price vector because I thought that we could definitely retrace one more time into this area of demand and then go higher. So after we hit that demand and we kept going higher, I just wanted to close on one of my accounts just to lock in some profits because I could kind of tell like we were gonna probably consolidate before NFP dropped, and then yeah. So basically like we closed one position out for this, and then before NFP dropped, I think like around, I think it was around here, I closed for like a 1 to 1, like this, 1 to 1.7, because when news got released like this was that candle, right? So price, what could it have done is it could have just dumped straight like this past Asian low, and then slipped us out, stopped us out, and then end up rallying right after some level like this, which is what I wanted to account for. And take heed of, like, right, like make sure that didn't happen. So obviously I have to close my position because I'm still in that range of that release, that news release. So there's not any point like taking that risk, right? But then obviously that was a catalyst, and then we just ran to our TP, and then you can see we hit off that 4525 level. But yeah, this was our main TP for like a 1 to 7, and this ended up going for 1 to 8.6. So genuinely one of the best weeks if if the price vector was like this, like if we did something like this and then we end up closing around here on NFP, like that would have been better instead of closing around here, which is kind of sad, but it is what it is. And we still caught a lot of money on Top Step, on Personal, and that was kind of the whole analysis. Now coming into next week, I will give you guys my analysis. Let me shut off all this stuff for now. Coming to next week, it's hard to say because if we go look at the monthly candle, January just opened up, but the monthly and the weekly, like we're still forming a top wick, right? You guys know that candles, what they do is they open up, they form a bottom wick, top wick, end at a point above the opening price for a bullish candle, or below the opening price to be a bearish candle, right? So in this case, we're still making the top wick, right? January opened up right here, so this was the opening price of January right here, right? So if we go over here, this is the opening price of January just in general. So we're expecting what? We're expecting price to make that top wick, show some type of confirmation, and then end up expanding down like this. Okay? And now I do think we are a bit oversold on or overbought. This rally was just way too aggressive. We should see some type of profit taking or rebalancing either in some premium of this range right here, or we're going to take out the high and then end up just dumping aggressively, right? So we don't want to just blindly try to short this because we could obviously just go to all-time highs. So we need to really wait for our structural confirmation before we want to look for shorts. So either we open up like this, right? We just pump higher. We just open up like this. We pump higher, go to all-time highs, and then we sell off like this, in which case, we still have to wait for our structural change around here. But I do not want to look for shorts, even though I'm very, very short biased still. I want to see this low get taken out. We can't look for shorts until we have some type of structural confirmational change like this, and then we end up essentially just entering in on the retrace somewhere here, or somewhere here, right? But we have to wait for that structural change to really confirm what's going on. Until then, we cannot take the trade. So Monday, not Monday, yeah, well, Sunday, Monday, right? If we open up on the weekly, right, weekly candle should open up, right, make a top wick and then expand down, something like this. And then once you do something like this type of pattern, we can just, again, enter in on some retrace and then just take it all the way back down, right? So really simple stuff. There's no divergence, as you can see. Like if we pull up the RSI, there's really no divergence going on here, so that's fine. I will say the reason is as well because this Sunday open just didn't this just opened up and dumped. So I'm not saying this high has to get taken out, but we should really see some type of real selling going on in this area if we want to confirm like ourselves, right? So we just gotta like monitor. Really, there's nothing to do right now. But if we go to the 1 minutes, let's see. Depending on how we close, I definitely do think we could take longs. We still could potentially take a couple longs maybe, off this level maybe, I don't know, somewhere around here, maybe just small little retrace, Sunday opening retrace, and then keep going higher for a couple RR until we see that selling confirmation. But yeah, so far we just got to sit in our hands, and kind of that's like the analysis going into next week. Fundamentally, the Fed, we have FOMC, I don't even know when we have FOMC, I think like 2 months or some shit, but we should be, I think, holding rates, which should cause some type of sell-off in this case because we have been cutting rates for the longest time, and I don't know if there's more implication that we need to cut rates. But yeah, there's that. But yeah, I hope you guys enjoyed. This is a pretty long breakdown of the trades that I took this week. And go ahead, make sure to join the Discord, guys. Shoot me a sub. I'd really appreciate it. And go shoot me a follow on IG. I guarantee you're gonna learn a lot. But yeah, drop a comment down below if you want me to explain certain concepts. If you like this, if you didn't like this, if you just want more elaboration. And yeah, hope you enjoyed that. Go join the Discord because we also do go live. Okay, so I do go live in my Discord at 5 p.m. EST to give like the real sauce, like the mentorship level sauce for my students. And then yeah, that was really that. So take care. Thank you for tuning in and enjoy your weekend, guys. Peace.